Hello, everybody. Thank you so much for joining our Q2 Centric Invest webinar. Really exciting platform today and agenda to go through with you. So thank you for joining. And yeah, if we crack on and move to the next slide, please. So what we're going to cover today, as I mentioned, quite an exciting day today. So obviously we'll do the introductions. We'll do as we do normally a market overview and a market update. We're going to talk about smart investing and what it is you should be looking out for. We've also got a really useful piece of content and downloadable guide for investors that we're going to bring up and allow you to download as well. So have a look out for that. We're going to talk about the infrastructure effect and again, what kind of things you should be looking out for in that respect. And also we are launching today our Longbridge development called Coopergate. So very much looking forward to getting into the detail on that. Okay. So who's with me today? So obviously it's myself, Andy Butts. I'm also joined by John Tracy and Sean Bennett. Both those guys are in Hong Kong. So I think it's late afternoon, early evening there. So thanks for joining, boys. We've also got Callie and Rachel behind the scenes, as always, in the marketing team. What I would say, any questions you've got, please, somewhere around the screen, there's a chat function. Please pop your questions into there. And we've got a little Q&A session at the end that will run through any questions that have popped up. Okay, so just a little overview into Centric Invest for those of you that don't know us or haven't heard of us before. We established Centric Invest to try and do two things. The first thing was to try and make international investors into the UK, trying to make their lives a little bit easier. So we offer an end-to-end service, which is sourcing great products, i.e. great properties in great locations. We will hold their hand through the entire process from obviously choosing a unit, going through the mortgage process. If you are an international purchaser, it can be quite tricky. So we've got some specialists in that market, through to connecting you with lawyers if needed that understand this process of buying off plan, right the way through to completion. So we'll hold your hand through the completion, the snagging process, and also make the right introductions when it's ready to be rented out and also ready to furnished. The second thing we do is work with developers to obviously highlight the right stock and give them an exit strategy that they probably wouldn't find here in the UK. So I think that's probably enough about us. If we start talking, then I think, Sean, you're going to take the UK property market overview.
Sure. Thank you very much, Andy. And thanks for the introduction. Yeah, my name's Sean Bennett, spelt the Welsh way. I'm based in Hong Kong and cover Asia and the Middle East. And as Andy's mentioned, effectively help expats predominantly enter into the UK property market. If I could go to the next slide, please, Rachel. Okay, cool. So look, the first thing to mention is, we're always looking at articles and research and things like that. And even now, if you go and Google yourself, UK property market, it's a little bit difficult to kind of cut through it all. Even the Guardian, I was looking last week, even the Guardian, you Google, and one article says, they're saying it's had the highest price growth for 6 months in March. And another article says, the property market's dropped for 6 months. And there's a huge kind of range of information. It depends if you're looking at ONS, if you're looking at Halifax, if you're looking at Nationwide, if you're looking at Rightmove information. Now, from what we're seeing over the last 12 months, if you take the average, I would say the property market has stayed flat, perhaps got dropped a little bit. But what we are definitely seeing is in these key kind of investment areas, especially these regional areas, we're actually seeing prices increases. Obviously, we've got our finger on the pulse. We're getting offered new sites all the time. And city centres and in and around city centres, the prices are only going up, especially in the areas like Nottingham, Birmingham, Manchester. If I could go to the next slide. Now, of course, when we're looking at property, we're looking at that medium to long term. It's not, when you have stamp duty, solicitor fees, it's not worth investing into if you're going to be selling it in a year's time. We are looking at that medium to long term investment. If you look historically, if you look back, UK property has always, even if there's been a drop, UK property has always gone back up again. Now that is, again, I can send a lot of information, but that is driven effectively by a chronic undersupply of properties. Now the statistics around the government had a target of 300,000 properties that they needed to hit. They were consistently about 100,000 under that. That's been happening for the last 40 years. Over the last 3 or 4 years, it's only gotten worse. They've actually gotten rid of that target because I think the Conservatives were a little bit embarrassed of not hitting it and trying to win seats. So because of that undersupply, of course, supply and demand, long-term prices are always going to go up. Okay, so if you look at here on the left, this is a Knight Frank report that came out around a month ago. So this is talking about the UK average of the next 5 years, and then talking about prime central London. This is definitely a trend that we are seeing. Okay, I'd say 95% of our clients who are purchasing properties are outside of London. Again, I could bore you guys with lots of numbers around the levelling up fund, around the infrastructure and things, which we'll talk about a little bit in a second. But that is definitely a trend that we're seeing now. Whilst I suppose prices and costs, unfortunately, are getting more expensive in the UK for not just people, but also for companies. There are corporations and people moving to these regional areas, which again is feeding into that. There's high skilled jobs and feeding into that undersupply of property. So there's some statistics on your left. On the right is talking about the rents. Now, as a lot of you, or all of you, I imagine, will know, rents in the UK have been going pretty crazy. Of course, there's two ways of looking at it. Of course, if you're looking to rent, it's not ideal, although a lot of people like the kind of freedom of renting. But it's also a great time to be a landlord. Okay, so there's an article that actually came out earlier this week talking about rent will outstrip inflation for the next 3 years. Okay, so again, there's not enough properties effectively, so that's kind of feeding into that undersupply, and rents are continually going up. Okay, so again, if you the plan of the property, it's a medium to long term investment. You're renting it out. There's rents are only going to keep going up. Prices long term are going to go up. So although at the moment there's a huge amount of data and it can be a little bit confusing, I always reiterate to my clients this: we're all about the kind of long term here. So cool. Next slide, please, Rach. I think it's back to Andy for the smart investing.
Yeah, thanks for that, Sean. Really interesting stats there. So smart investing, this is actually, if you could just stay on that slide a second for us, Rach. Smart investing, so this is a piece of content and almost a downloadable user guide for investing in 2024 and beyond. We've done a huge amount of research into what makes a good investment, the things you should look out for. And we've also combined that research with another piece of research that we did around tenant audience. So we asked thousands of tenants and we got back in excess of 600 responses from tenants. So it's quite a detailed report and survey, which details exactly what it is tenants are looking for. And if we move on to the next slide please, Rach. The really important thing is you need to know what your tenants are looking for to make a good investment. There's hundreds of things to consider, almost an endless list of things you want to look for. But we've tried to drill down into 7 key areas there, which you can see. And we understand that ultimately, without a tenant, without a good quality long-term tenant, the property doesn't become an investment. Okay, so it's vital that you understand what tenants are looking for. Also, when we're out there in the market looking to bring new stock to the market, to sign contracts with developers, we're looking at all of these things. So obviously the price point's really important, location, amenities within the building and surrounding, the size of the units. Obviously there's a lot more work from home happening these days, so we've got to understand what the end user is going to use, or how the end user is going to use the property. We look for areas of regeneration where there's still price growth, capital growth to be achieved. We're trying to understand who the target audience is. Again, understanding your market is really important. And we're trying to find places where there's community, or there's community building in place. And I think as we move through the slides and get onto the launch, you'll see that the development we're talking about today ticks all of those boxes. Okay, so in that piece of research that I mentioned with a tenant survey, we found out exactly what it is tenants are looking for, and more importantly, what they're willing to pay a little bit more for. There's 3 overriding factors that came out of the survey, and you can see we surveyed tenants across Birmingham, Manchester, Sheffield and London as the core cities. There were a lot more in other areas and towns, but they're the core cities. And the three priorities and things that they would look for and pay more for are listed there on the left. So properties that are energy efficient. We obviously know we've been through an energy crisis and are still there. It's very expensive to run your properties these days. And especially with people spending more time in their properties working from home, they've got the lights on, they've got the electricity running, the heating running. So energy efficient is top of the list right now. So again, bringing it back to your investment, buying a new build that's going to be a B or a C EPC rating, which is energy performance certificate, it means that that will tick the box for your future tenants. Similarly linked, people spending a lot more time at home now. They're looking for outdoor space, so balconies, communal terraces, local parks. Again, Coopergate that we're going to talk about has all those things that we've just mentioned. And also then we're talking about social space, we're talking about work from home, breakout space maybe, communal lounges, and also amenities around the area. Again, I'm sure John will touch on it when it goes into Longbridge, but there's a huge array of opportunities in the immediate location, such as Herbert's Yard, where people can use that as a social space. Right, important bit. We'll leave this up for a minute, but if you guys want to scan that on your phones, it will take you to a downloadable version of Smart Investing, which is a really detailed investment guide. So if anybody wants to scan that now, they can. Just register your details, you'll get the document straight away. Or if anyone wants to contact us to find out more, then please do get in touch. Okay. Right, I think we are now handing over to Sean to talk about the infrastructure effect.
Cool. Thank you, Andy. So, as Andy's mentioned, we are very much a research-led company, and research really is at the kind of forefront of our investments. When we're looking at research and when we're looking at the kind of fundamentals that drive property, I mentioned supply and demand earlier. The biggest one that we look at, and what I personally look at, is infrastructure. Okay, so government fiscal policy, private investments. As I mentioned briefly earlier, of course, if there's a lot of kind of regeneration and infrastructure going into that area, that usually means corporations moving their high-skilled jobs, salary increases, as I mentioned earlier, and then again that feeds into that, those young professionals who we're really looking at. So, Rachel, if I get the next slide, please. So first off, I wanted to look at a kind of an example that has happened. Okay, so this is looking at the Crossrail in London, which most of you should know. If you don't, effectively, it's a new train that took around in the classic UK fashion. It was a little bit delayed. Okay, so it's a train that's gone from central London, has actually now gone through to the east of London, starts in Reading, which is West London, just outside, and went into central London, into Liverpool Street, Tottenham Court Road, all that, and then has now continued to go through to the east of London. Okay, so in the purple is the price increases of properties on that Crossrail line. Okay, so in the close proximity to the Crossrail line, the blue is the price increases in the wider area. Of course, it kind of sounds quite obvious when you say it, but it's very powerful to see. Of course, if you're near that infrastructure effect, if you're near something that's going to make your commute quicker, of course, the property prices there are going to increase. Now, the other thing to note in this is, if you invested in these areas now, of course, you'd still do well. It would still be a good investment. But a lot of that growth happened during the build of that period. And then once it actually completed as well, that gave it another kind of injection into the property price increases. Okay, so a lot of that growth and that property price increase happened during the build period, especially during the first couple of years. Gone a little bit quieter, and then as soon as it was completed again, it had another kind of injection in the arm onto the property prices. So if I go to the next slide, Rachel, why we're talking about this is, of course, the HS2. Now, again, hopefully you've all heard of the HS2. It's a government high-speed train, okay, that is it's costing, again, started off about £60 billion and now saying it's going to cost around £109 billion. Phase one is there was a phase two from Birmingham to Manchester that has recently been scrapped. So phase one, and the only phase, is basically between Birmingham Curzon Street, which is in the centre of Birmingham, into London Euston. Now, the fastest train time at the moment to get from Birmingham to London is 82 minutes. When this completes, you'll be able to go from central Birmingham into central London in 45 minutes, okay, which will be an absolute game changer for the city. Now, this was announced, a good 3 or 4 years ago, and there's been a lot of buzz around it, okay, and it's going to be an absolute game changer for the city. Of course it is. Okay, now, knowing UK trains, people aren't possibly going to go every day between Birmingham and Manchester and know how expensive they are, but you could see someone having their head office in London, for example, and commuting 1 or 2 days a week from Birmingham into London. Okay, naturally, again, off the back of this, it's going to have it already has had a huge impact, and it's going to have a huge impact on the property prices in Birmingham city centre and in the surrounding area. Again, we're seeing that growth during the build period. This is due to complete, they originally said 2026, they're now saying between 2029 and 2033. Knowing the UK, realistically, probably more towards the 2033 market, but a lot of that growth and a lot of that price increase is going to be during that build period, as I mentioned, happened with the Crossrail. If you could move on, I will now pass you on to my colleague John, who's going to talk you through the area for our new launch.
Good evening from Hong Kong. Yeah, so Longbridge is our pick for this year. It's, as Andy said, it's ticked all the boxes, and I'm going to go into why it ticks all the boxes. So if we get the next slide, please. Okay, so Longbridge is very close to Birmingham city centre. It's about a 20-minute train ride into the city centre, but you've got what's best of both worlds, which we'll come on to. It's got amenities nearby, on site, and you're very close to the city centre. Now, Birmingham city centre has grown incredibly. I've been involved personally in a huge amount of development in Birmingham since 2015. And prices then were like 140, 150 for a one bed. Now it's like 250. So there is a big price increase, and that is the same for rental. So people are looking at areas where we've got amenities, but slightly lower rentals and slightly lower purchase prices, which this ticks the box. You're looking at 20% growth over the next 5 years. You're very close to Birmingham city centre, and you've got over £1 billion of regeneration and infrastructure going into here. So just what Sean said about that infrastructure effect, you're looking at a live example with a huge developer to deliver some housing and apartments at very close proximity to Birmingham, and also to benefit from that HS2 effect. Next slide, please. So getting around, so from Longbridge, Cooper Gate, there's literally a retail park on the doorstep. So retail park has got an M&S, which is the biggest M&S, and this is open already, M&S in the West Midlands. So companies like M&S don't do things like that by accident. M&S put their flagship store, i.e. their biggest store, in the West Midlands in Longbridge because they see a future and they see the right type of tenants nearby who can afford to buy M&S quality branding. You've got a pure gym, a 24-hour gym. You've got a train station. You've got Lickey Hills, which is a country park just 5 minutes away. You've got QE Hospital, which employs over 20,000 people, 15, 16 minutes away. You've got University, which is Birmingham University, which is top 12 in the UK, 12 minutes away, which has got thousands of students. Overseas students may look at this. You've got lecturers, you've got staff. So you've got a real connectivity which will work for either people working nearby or people working, in Birmingham or nearby Birmingham. So next slide, please. So yeah, just to confirm on the catchment area for employment. So the furthest away will be the city centre. So from Longbridge to Five Ways, where if you worked at Deutsche Bank, you worked at RBS, you worked at HSBC, which is like 30, 40,000 financial jobs, you would get off at Five Ways, which is 16 minutes away from Longbridge. So you've got all those jobs there. So you can get on the train in the morning, go home in the evening. At the weekend, you've got your golf course, you've got your country park nearby, and you don't have to pay congestion charge on the train. There is a congestion charge in Birmingham, which is obviously stopping people driving into the city centre. Nearby, you've got NHS. Yeah, so you've got Queen Elizabeth Hospital, you've got Jaguar, you've got Cadbury nearby. So within 20 minutes, you've got perhaps 100,000 jobs within that distance, which creates a huge tenant supply and demand. Next slide, please. So yeah, just best of both worlds. So post-COVID, people want more. They want to live their life. So what you saw before COVID is perhaps people just want to live in the city centre, and that's great. You've got everything you need on your doorstep. But some people want more now, so they want to be close to the city centre, but they want the cake and eat it, so to speak. They want to have a golf course nearby, which you've got here, 5 minutes away. You want a sailing club, 4 minutes away. You've got Birmingham city centre on your doorstep. But you've also got a country park, which has got hundreds and hundreds of thousands of acres of a country park where you can go hiking and mountain biking at the weekend. So for that reason, there'll be a huge demand for this kind of property and projects because of having the best of both worlds. Next slide, please. So, introducing Cooper Gate. So this site was previously the Rover factory, which was a huge employer, perhaps the biggest employer in Birmingham in the 70s, 80s. It closed down in early 2000s, and now St Modwin Homes, who are a FTSE 250 developer owned by Blackstone, who are a $1 trillion company, have teamed up with the council to put in a huge amount of infrastructure and housing into this location. So this is the first release. So Cooper Gate is the name of the block. The reason why it's called Cooper is because a Mini Cooper was originally manufactured on the site. So a nod to the past, a nod to history. So there's 1 and 2 bedroom luxury luxury specification. Price is £187,000. Just 15% on exchange, which is low in my experience. Most developers ask for 20%. Some ask for more than that. It's just 15% on exchange. Completion is Q1 next year, 2025. So a lot of people like the fact that it's a year from now when it will complete because interest rates are likely to drop with inflation easing. There's car parks available. You've got excellent transport links, and you've got the amenities. You've got M&S. You've got Herbert's Yard. So Herbert's Yard is by the same guys at the Digbeth Dining Club, which is very famous in Birmingham. So you've got outdoor space for concerts, street food, that kind of thing. So you've got a real community feel, which, as Andy mentioned earlier, that's what people want. They want quality apartments by a quality developer with good connectivity, with all the amenities, and this ticks every single box. Next slide, please. So a bit about the developer. So if you're investing from Hong Kong, I've been here 17 years, and hundreds of clients have invested with me into the likes of Birmingham. You need to team up with a big developer who's going to deliver A, on time, and B, a quality product. Now, a FTSE 250 developer is a FTSE 250 developer for a reason. They've got a track record, they've got capital, and they can build without any funds required. So basically, St Modwin Homes was acquired by Blackstone in 2 years ago, for £1.8 billion. So they're privately owned now, which is Blackstone is a $1 trillion company. So you're looking at as blue chip as you get. This is not a small first-time developer. This is someone that I've worked with before in Birmingham, in Digbeth 1. All my clients there were happy, built on time, valuations were on the money, rentals exceeded what people expected, and they've re-rented, and the quality of the building has been kept up. And it's just a quality outfit, and we're really, really excited to be working with them on this project. Next slide, please. So what are we looking at? So we go officially launch next week to general public. There's a waiting list of people who bought with us before, looking to take units. So if you are interested, you need to get in touch. So there's 2 examples here. So what Andy talks about is outdoor space. There's quite a few units, apartments here with outdoor space balconies, which is obviously something that's been designed post-COVID. People want that bit of breathing space. So you've got one apartment 143 here. It's on the 4th floor, which is the top floor. It's got ground 1, 2, 3, 4. It's got a balcony. It's a 1 bed, 1 bath. 200k and just 15% on exchange, which would be £30,000. And that's going to rent for probably £1,000 a month, which will give you a super strong yield of nearly 6%. So a 2 bed. Now the 2 beds, there's an acute shortage in this location of 2 beds. There's an acute shortage of apartments, full stop. But the 2 beds are really ticking the boxes. The 2 beds are, or every single 2 bed is a 2 bed, 2 bath. Every single 2 bed comes with a balcony, and every single 2 bed comes with a car park. So, for example, 124 here is on the 2nd floor. Got car parking, yes. Got a balcony, yes. It's 2 bed, 2 bath. So just think, quick fact: Birmingham is the youngest city in Europe by age demographic. I don't know how that's come about, but it's a fact. So you get a lot of people, young professionals, who want to share. That 2nd bed bathroom is super important for getting good rentals. So 2 bed, 2 bath. Price is 267,500, including the car park, which will be an assigned space for you. Is 282,500. So literally just over £40,000 to invest. Then the balance on completion next year, where we can get a mortgage for overseas buyers, if you're overseas, up to 75% with brokers we've used for 10 years plus. So yeah, next slide, please. So that's Cooper Gate. I can't say how excited I am about this particular launch. When you get all of the boxes ticked for us, location, developer, price, deposit structure, it catches fire. There's three other blocks. There's two other blocks after Cooper Gate, which will be incremental pricing. You're probably looking at a couple of percent increase on apartment prices on every block. So it's always a case of the early bird catches the early worm. So you do need to get in first to get the best pricing and get the best apartments. So after that, I will open it up to Q&A with Sean and Andy rejoining me now.
Yeah, hi guys, thanks for that. Yeah, really some interesting stats there, guys. Well done. Callie, I think you're waiting in the wings with any questions that might have been put in the chat.
Yeah, we've got a few here for you. So first one is, why Longbridge over the city centre?
Okay, cool. I'll take that one, I think, guys, if you want. So city centre has been very, very popular with tenants and purchasers, both owner-occupiers and buy-to-let, for probably the last 10 plus years, a lot of which has been about, HS2 focus, those that missed out on the Crossrail in London. But what we're finding with the city centre is both rental and purchase price have only gone one way, and people are really struggling to afford some of those prices. So what Longbridge does, we think, is gives people a city centre product and lifestyle, but with a suburb price tag. So I think it's important to again reiterate that you're 20 minutes from the city centre by train. That train station is just what, 5 minutes walk through the retail park. There's 4 trains an hour, so you really are on the edge of the city centre, really. And there's still tons and tons of employment opportunity around there. But it's slightly cheaper than the city centre. So that's why we're really pleased to be instructed on it and really excited to bring it to the market. And it's probably why we'd say, and Longbridge has still got future growth. Like I think there's £1 billion worth of infrastructure going in total into Longbridge. So if you drive around there now, there's still things happening. There's still lots of diggers around. The business retail park is still being improved and built. So yeah, there's still mileage in it, I would say. So that's my short answer, I think. Guys, feel free to add anything if you want to on that. No.
That's good.
Next question then, Kelly. Thank you.
So next question we've got is there any additional deposit to pay after the initial 15%?
Question. John or Sean, do you want to take that?
Yeah, I'll take that. Yeah, so yeah, with off-plan properties, there's a lot of some of our sites, for example, are 10% and another 10%, or 15, 10%. Some developers ask for 20, 25%, which we, anything more than 20%, we strongly don't advise. I suppose we don't advise. With this development, it's effectively so you reserve today. In 28 days, you pay 15% of the property price minus your £2,000 reservation fee. You won't pay anything then until completion, which is Q1 2025, although they're saying the end of this year, but we're just giving a little bit of a buffer, so Q1 2025. And then effectively you have 85% left to pay. Of course, you'd use a mortgage to fund up to 75%, potentially 80%, but up to 75% of that. So you're going to need, say, for example, that £200,000 property, we can run some quite in-depth cash flows, but just as an example, if a £200,000 property, you're going to need £30,000 now, and then roughly another £30,000 when you complete to cover that extra deposit, your stamp duty, your solicitor fees, those kind of things.
Yeah, I think just on solicitors there, it's worth mentioning as well that we've got a firm that's ready and willing and able to act on these. They've seen the contracts, they're happy with everything. So again, if there's any queries around that, we're happy to make some introductions.
Yeah, and they're used to overseas buyers. They're completely used to buyers in Hong Kong, Shanghai, Singapore. Wherever you may be, they're fully versed, and we're fully versed on overseas buyers.
Good. Any more, Kelly?
Oh, thanks, guys. There's another one here about parking. So is there parking available for all of the apartments?
Okay, so how this works at Cooper Gate, so every 2 bed there's an option to buy a car park. for the one beds, there's actually roadside parking available, which without any restrictions whatsoever. So I would probably suggest that most people on the bed will probably walk to the train station or walk to work or cycle to the train station. Obviously, you know, this cycle parking cycle stops there. But all the two beds have the option to take that car park. So yes, there is car parking, and it'll be gated, it'll be secure. But there's also roadside parking without any restriction, which is very, very rare. So yeah, there's parking options.
Thanks, John.
Cool, thank you. Next one we've got, will the future blocks be more expensive?
Absolutely. Look, I look at with Andy and Sean, we look at sites all the time. You know, if we go back a year, prices were lower, prices are now going up for the future. Birmingham has touched, there's some developers in Birmingham touching £600 a foot in certain locations, which is very high in my opinion. Prices here will increase. Block 1 is the first early bird, early worm, early breakfast. Gets the best unit. So next block will be about 1 or 2% higher. Nothing crazy, but still significant. 2% is £4,000 or £5,000 a unit. So, but yes, there will be higher prices on the future blocks.
Thanks, John. And then we've got, is a one bed or a two bed a better investment?
For me, I think maybe everyone's answered this one, but for me, Birmingham, young city, I'd say youngest city in Europe. Two bed, two bath. If it was two bed, one bath, I wouldn't be so confident. But two bed, two bath will do extremely well, especially with that terrace on the car park. So for me, I'd go for a two bed, two bath. Although the one beds will rent all day long as well. All the units will. But for me personally, if I'm investing, I'd be taking a two bed, two bath around a 280k mark. £45,000 down now, and that will rent for circa £1,200 a month, which will give you a nice yield of around 6%. So yeah, that's my take. I don't know about you guys.
I was just going to add. I was just going to add. I mean, that's probably the biggest question I get asked to us. I think there's benefits to both. Like one, traditionally or usually one beds tend to get a higher yield just because of the kind of price to rent ratio. But many people argue that two beds have a better kind of capital appreciation because obviously when you go to resell it and what your exit strategy is, one bed not always the case, but you tend to be selling to other investors. Whereas two beds, especially two bed, two baths, you could be selling to investors, but also people to buy to live in as well. It's not always the case, but there's positives and negatives to both. But in this development, like John's mentioned, with the parking and the two bathrooms, I do quite like the two beds.
I think, to be honest, you're going to do well whatever you buy. It depends on your budget. I think that's probably the best answer. What are you willing to deploy there versus what's available right now or next week?
Yeah, I think just my take is the two bed just opens you up to a wider tenant pool. So you can have two sharers, you can have a couple, you can have somebody that wants a separate room for work from home. So you've just got a wider target audience. But like Sean said, there is horses for courses, and I suppose it just depends on what deposit level you've got ultimately available now, and what your strategy is. But again, get in touch with us, and we'll talk through those and try and guide you and pick out our favourite units that are left.
Cool.
Good. Any more, Ellie?
Last question that we've got. So, what is the tenant demand like in Longbridge?
I'm happy to take this if you like. Yeah, I think the research we've done shows very limited stock available to rent in Longbridge, and what there is goes very quickly because of the supply and demand seesaw. We also see that there's not a huge amount of modern, contemporary, well-built stock as well. A lot of it's kind of 60s, 70s build. So those young professionals or even middle level professionals that are after something, sharp and contemporary, there's really not a lot of choice. So we feel that there's a huge amount of tenant demand, having tracked this for the last 6 or so months while we've been working on launching this. So yeah, we've mentioned all the reasons why in the webinar, but I think the employment conversation is the big one, and that therefore there will be a huge amount of tenant demand. Good. Okay, guys. Well, thank you very much for your time. Thank you to everyone that has joined. This will be loaded up onto YouTube, and you'll get a copy of it as well if you have registered. So, yeah, any other questions, please do get in touch with us, usual channels, or visit our website, centricinvest.com. Thanks, everybody.
Very much.
Yes. But